Network National Webinar on Parish Endowments and Finance during this time of uncertainty. My name is Deirdre McElroy. I serve on the SEAT Planning Committee in the Endowment and Finance tracks. We are really happy to connect with you all today. We hope to strengthen, if not re-strengthen you as stewards and decision makers. The SEAP network plans to offer a series of webinars for you for financial roles and decision makers within your parishes and dioceses and other entities. The next one slated for 2 weeks from today, so mark your calendars. Right off the bat, and to assist you, we titled this webinar with PITH instruction: stay calm, stay connected, and seek opportunity. And so now, to stay calm, let us pray. Holy One, you are our comfort and strength in this time of crisis. Surround us with your grace and peace. By your Spirit, lift up those in distress, sustain those who administer, strengthen those who steward, and fill us with the hope of your new creation through Jesus Christ, our rock and our Redeemer. Amen.
Amen.
We've gathered a fantastic panel of experts for you, so let's get them introduced. All of our panel members and speakers today are experts who participated in SEAP 2020 in Louisville, and all are reported to be feeling well and good. Thanks be to God. Bill Jarvis is a managing director at Bank of America, where he heads strategic thought leadership for endowed organizations. His expertise includes research and writing, and he has authored numerous papers on investment policy and governance. As an educator, Bill is a frequent moderator and panelist, as he was at SEAP 2020, at conferences of nonprofit organizations. He also counsels and advises boards and investment committees on strategic and policy issues. Joe Matthews is Senior Investment Management Consultant with Morgan Stanley Consulting Group. Joe is expert in addressing the needs of institutional clients, and he's been recognized, many accolades given, in Endowments and Foundations magazine for his body of consulting work. Joe holds the CFA charter and is an adjunct professor in behavioral finance and economics. Joe and his team at Morgan Stanley partner with other institutional consultants throughout the country. Ann Hanson is president and CEO of the nonprofit Church Investment Group, or CIG. CIG enables Episcopal Church and school endowments to realize the benefits of investing at scale, to invest, to preserve and grow capital, using an outsourced chief investment officer, or OCIO, and also she counsels her clients to adopt environmental, social, and governance, that is ESG, investor practices. CIG is a UN Principles for Responsible Investment, or PRI, signatory. Joanne also serves on the advisory committee of the New York State Common Retirement Fund. No small task. Carsten Sierck is program director for the Endowment Management Program at the Episcopal Church Foundation, or ECF. She advises investment committees on all aspects of endowment management. Carsten is a lawyer by training, and she is particularly focused on advising volunteer investment committees as they carry out strategic and oversight responsibilities. Carsten encourages committees, always, to keep a close eye on building and maintaining the trust of their organization. Jim Murphy is Managing Program Director at Episcopal Church Foundation, or ECF, and he oversees programs in endowment management, planned giving, and donor solutions. This includes ECF's Donor Advised Fund Program. Jim works with many parishes, dioceses, and other Episcopal entities to enhance and develop the growth of their endowments. We're going to begin with Bill. Bill, at this time, we've all been yanked out of our comfort zone. So many parishes are experiencing a flood of bad news. What 3 governance recommendations do you have that can help vestries, trustees, clergy, and staff think in a calm and orderly way?
Well, thanks, Deirdre, and thanks to Joanne, Jim, Joe, and Carsten for participating here, and for all of you who have logged into this. This is a time when, of course, parishes and dioceses are totally upended in every way, from beginning to end of mission, finance, endowment investing, and of course, the spiritual part of why we're all here. In answering your question, I'll come to it, Deirdre, from the point of view of a paper that I wrote earlier this year, which is geared toward endowment investing. But we shouldn't forget the spiritual, operational, financial, and in fact, sustainability issues that I'm sure we're going to come to on this call as well. Coming to the question about the 3 points, there are in fact 3 fairly simple things that a vestry or a staff that is charged with finance and investment committee can in fact do in this environment, which are very grounding. The first sounds very simple, and from an investment point of view, it's simply to know where you stand. This is something that we were advocating before this crisis occurred. Some of us may recall that at the end of last year, as the market recovery seemed to be passing its 10th year, a full decade of seemingly favorable markets, many clients came to us and said, well, when will the next recession occur? What will happen? How can we judge what will happen to our portfolios, to our endowments, as churches, as parishes? And the response was, as I said, know where you stand. Your advisor, whether it's us at Bank of America or another competent firm, and there are many here on this call, where can do modeling, can do stress tests that will show what a portfolio will do when it's subjected to the things that people were fearing, a recession, a rise in interest rates, other things. Now, Deirdre, we're going through this in real time. We've actually had this horrible experience. We're now seeing the collapse in the economy, hopefully mitigated as we speak by actions that are being taken by the Federal Reserve and by Congress. But we are now seeing what happened to each of your portfolios, as in fact at your parish, the decisions that you made have now come to pass and have been subjected to this stress. This doesn't mean, though, strange as it may sound, that there's no room for doing other tests, that there's no room for trying other things to see what the portfolio is not only exposed to and vulnerable to, but favorably exposed to. So that's point number 1, know where you stand. Point number 2 is a corollary of that, Deirdre, and that is to know why you stand there. Many times portfolios of institutions, whether they're churches, charities, museums, performing arts companies, can often be, and we see this in the college and university area where I edited the study for many years for the National Association of College and University Business Officers, you would see people constructing portfolios so that they looked more or less like those of peer institutions. And that could be something that might be good if your institution is really like your peers, but it might not be if you're doing it just to be like others, to be safe, to be safety, take that safety in numbers. The know where you stand is beginning to be the beginning of wisdom. Know why you stand there is taking the portfolio and working with your advisor to understand what the purpose is of the allocations that you've chosen in your endowment or in your investment portfolio, and how they work with each other. How do they support each other? How do they bolster each other against downturns or upturns in the market? And this doesn't require that you be like our friend Joe, a CFA, a chartered financial analyst, or that you be like myself or Carsten, a lawyer. You just need to be an intelligent human being who's willing to work with the advisor that you've hired and press that advisor to say, all right, we have this allocation. Why do we have it? What's its purpose? What will it do in certain situations with other parts of the portfolio? And this is something that need not, Deirdre, go on in one meeting. It can become part of the educational process of the investment committee so that they become intellectual owners of the portfolio. So those are the first 2 points. Know where you stand and know why you stand there.
Bill, if I may, before you start your 3rd point for us, if you could move closer to your microphone, please.
All right. And maybe what I'll do is turn up the sound a little bit. Is that any better? Is that coming through more clearly?
Yes.
Good. All right. So now that we know where we stand and know why we stand there, the 3rd point is to know where you're going. And this, in this environment where the room has been full of falling knives and falling other weapons, they're dangerous things, very hard to say where the future will lead. But as we go day by day through this process, Deirdre, we're beginning to see, first of all, likely to be the various outcomes, and not necessarily on the epidemiological front, but let's call it on an economic front, because we really are talking about three crises. We're talking about an epidemiological crisis, a market crisis, and then finally an economic crisis. But as we go day by day, we're beginning to see the market begin to try to find a bottom. Our colleagues on this call will be talking about that, I'm sure. And we're also beginning to see actions being taken to mitigate some of the economic consequences. So having a sense of where you're going over the next 12 to 18 months is also very important, and then circling back to that knowing where you stand. So those are the 3 points: knowing where you stand, knowing why you stand there, and knowing where you're going. And these are things that as fiduciaries, vestries, and investment committees hope to do.
Thank you, Bill. We're going to come back to you a little bit later with a follow-up question. I'd like to turn the mic over now to Joe Matthews. Joe, we have seen dramatic actions taken by the Fed to help the economy. Could you please speak to those and tell us what the Fed is trying to accomplish?
Thank you, Deirdre. Thanks, Bill. What the Fed's trying to accomplish here is create a backstop for all types of trading of securities, fixed income securities. What we've seen happen here is the Fed has, the markets have effectively locked up, and there has not been an awful lot of liquidity. And there's an old saying on Wall Street: liquidity is a coward. She disappears when you need her the most. And the markets need liquidity right now, and she can't be found. So as a function of that, the Fed has stepped up, and stepped up big time. They stepped up big time last week, and they've basically taken one of the biggest hammers in the bag out of the bag today by announcing that they'll be buying all types of fixed income securities: corporate securities, commercial paper, agency bonds, government bonds. And what that does is, one, it creates a sense of confidence in the markets, but what also it does is it creates that level of liquidity that markets need to function properly. So without liquidity, markets participants become afraid, right? They become anxious. And we all know when you tell somebody they can't have something, they want it more, right? And it's true. Now, so what the market's been facing here is an awful lot of people have had margin calls, liquidity calls, redemptions. Mutual funds have seen just an enormous amount of redemptions. That people have panicked, have just decided they wanted to get out of their long-term investments for the sake of getting out of them, just because they were going down. And the Fed has attempted to eliminate that to some degree, okay? And that's called monetary policy, right? So there's 2 ways that the government can help in times like this. One is through monetary policy, and that's the business of the Federal Reserve Bank. And then there's fiscal policy, which is the business of the government. Unfortunately, we're let down a little bit today because Congress was not able to pass the stimulus bill. I'm sure they're going to get an awful lot of flack for that, and that should be sooner than later. But the Fed effectively is trying to act in a manner that will allow securities to trade in a efficient manner. So because of that, the markets should start to see less volatility, albeit today we were down 700 or 800 points at one point. So the market didn't necessarily recognize the fact that the Fed has even taken into a higher degree of what they're willing to do. But with that being said, they're doing what they should be doing, which is just getting in front of the investment community, getting involved in the capital markets. And because of that, things should calm. I mean, gosh, we haven't had back-to-back positive days it's got to be 3 or 4 weeks in the market. We had a couple of days of 9% up or down last week. You know, we've had more plus or minus 4% days in the last 4 weeks than we've seen since the 1920s. So there's been an awful lot of anxiety, right? And change creates anxiety. But with that, what we've seen now is participation from the Federal Reserve Bank, which at some point, and there's an old saying, the Fed always gets what it wants, right? Don't fight the Fed. And the Fed will ultimately add some level of, will have some type of calming effect in here. Now, what has to come with that is the exhaustion of selling, right? Because a lot of people have been selling, some for the sake of selling, some because they're forced to sell. So with that, they've taken on the role that they should have. So it's Jay Powell and his Board of Governors have done what they should have done.
So you're one of our data guys, and we know you're good with numbers. So I'm just going to ask you to help us understand, if you will, the shape of this recession that we're in and the shape of the recovery. Do we need to learn new terms like a U-shaped recovery, a V-shaped recovery, or an L or an I?
Right, right. It's right. There's all the words, letters, and thank God they're in English, they're not Greek, so everybody, at least is familiar with, what we're talking about at the base level. But at the end of the day, you're right, Deirdre. Those are different ways that we can come out of this recession that we're in. We don't know it officially yet, but in a recession from a technical perspective is back-to-back quarters of negative gross domestic product, which is all the goods and services produced in a country's borders, right? So you don't know it until you're out of it that you were in one. But our feeling is, in all likelihood, what you'll see is possibly a V-shaped recovery, which is a very violent downtrend followed by a very violent move upwards. And reasons for that include the consumer balance sheet is in good shape, right? You've got all-time low mortgage rates, right, which is a raise to the consumer. The consumer represents 70% of this economy in the United States. So the consumer is very important. You've got the savings rate is well above average. Everybody's learned from 2007, right, that putting money aside and not spending more than what you make is a good thing. That's come with the demographics of the country getting older as well. So in gasoline, right, fuel prices are, gosh, at 20-year lows here. So because of that, what we'll see is the consumer's got a raise on two fronts: lower fuel prices, lower heating oil prices, as well as lower mortgage rates for those of us that have a mortgage. So what we expect to happen is possibly a U-shape, right? The U being where you've got a longer trough, okay? And that's probably more related to ultimately what type of damage the virus does to the economy. And we think we peak probably in early April based on the data that we've been getting from Johns Hopkins, okay? And based on what we know from how China and Italy have gone through their cycles. So we think probably early April, and if that happens, we're looking at probably more of a V than a U. But if we do get, this virus does continue to cause damage to the economy, it very well might be a U, which is going to be more of an elongated recovery process.
Any other comments about the bottoming out process, since we may or may not have seen it yet, Joe?
Yeah, it's always darkest before the dawn, and then it gets pitch black. But at the end of the day, it's hard to pick a bottom, right? We've seen an incredible amount of carnage here, right? 30+% negative returns in the last 4+ weeks. Last week, we had major indices, S&P 500 and the Dow were down almost 15% in a week. So the bottoming process is never pretty, okay? And it's not going to be pleasant, and we very well might be in it right now, and hopefully we are. But given where we were just a month ago with 10-year Treasury interest rates twice as high as where they are today, oil's come down from the 70s to the 20s since the end of January. So we've seen a lot of damage already done. There's a fear index called the VIX, right, which is the volatility index, VIX. That's nearly as high as it was in 2008, believe it or not. So we've got a crisis of confidence here, right, that was trading above 80s into the 80s. So we've seen blood in the streets here, both from a numbers perspective, but also from the way people are acting. And, the data would tell you we're a lot closer to the bottom happening if we're not in the process of that bottoming process already.
Thank you. As many of you may speak to this, please, when you give us your comments, I'm going to ask you, Joe, if you think now is a good time for our stewards, parish stewards, and particularly investment committees to review their investment policy statements.
Yes. That policy statement should reflect a few things: the investment time horizon of the pool of money, the liquidity needs of that pool, right, and the risk tolerance of that pool of money. And obviously, that pool's mission should be aligned with the mission of the organization, right? So taking a look at the investment policy statement from a governance perspective, and that's Bill Jarvis's expertise, and looking at the asset allocation to make sure that asset allocation is consistent with what the monies are trying to accomplish, but also viewing each of those asset classes as an individual revenue stream to the pool of money, because each and every one of those asset classes has individual characteristics specific to that asset class that should be used for the benefit of the overall pool of money. So yes, that policy statement's a governing document, but that being said, it's dynamic in nature. And we've got a black swan event here, right? The unicorns appeared, and it's always a good time on a systematic basis to review that policy statement. But in times like this, having everybody sit around the table and review it's good from the perspective of keeping an investment process in place that's definable and repeatable, versus somebody putting their hand up and saying, I went to 100% cash, why don't we do the same thing? Well, what people do that are sitting around the table for their own personal accounts isn't necessarily consistent with what the organization, the parish, the diocese is trying to accomplish for themselves.
Thank you. And thank you for your comments about, I think they were hopeful comments about us seeing a peak in the short term. I want to turn over to Bill Jarvis now and ask Bill a question about a slightly longer term. Bill, looking ahead, what are some of the longer term consequences of this pandemic, and how can our member parishes and dioceses think about them?
Well, thanks very much. And Joe, thank you. You nailed the four things that are investment policy related things about toward the end of this call. But thanks for that. It's very hard, Deirdre, to be in the environment and not to, and to be able to lift your mind and look even to the point Joe was making, 6 weeks, much less 6 months or a year and a half forward. But there are things that we can see around us that may turn out to be relatively permanent featurescape going forward. So, for example, I heard earlier in the introduction that Joanne, in addition to doing OCIO service, has a very strong ESG patient, as do we. Part of that desire not to be contributing and not to be contributing to climate change is heavily related to things like air travel. We're now seeing a situation in which travel is down very, very severely. And we're all having the experience that we're having right now, doing these kind of meetings, doing them virtually, and using pretty good technology to achieve them. So one of the things that you may see going forward, and I'd be interested in others' view on this, is a world in which there is physical travel, which technology not only becomes usable, but becomes almost the norm, in which face-to-face meetings can occur in this way and become much more often, much more frequent than the way that we've had before. So things like this are things that you need to think about when you're thinking about the shape of your mission going forward, the expenses that your parish may forward, the way in which you want to structure not only your investments, but your outreach going forward. We had, just to wrap up, Deirdre, a very interesting call last week, which you were a leader of, with clergy around the country. And I don't know if very many of you who are listening were on that call, but there were several clergy members who in this lockdown period have made extensive use of social media as ways of reaching out to congregations, to parishioners, and create events that may become, if not dominant, more normal than before. So here is an example, Joe, for making a sudden stop event, which may yield a different kind of approach to many things going forward. It's something we need to keep our minds open to, I would propose.
Thank you. We're getting a report that we have a little bit of background noise, so I think Joe's going to be muting we're going to mute the microphones for all who aren't speaking. Thank you for your comments, Joe and Bill. Ann Hanson, thinking in terms of both parish operating costs and investment management, what are the 3 levels of response that you advise our parish endowments to consider?
Well, we're in really turbulent times. Effectively, we have gone into an unprecedented experiment in turning off the economy So we're suppressing all demand. And I think it's important to recognize that there is another shore. Demand will be released again. However, it's exacting a terrible price on individuals, employees, small businesses, corporations, and obviously the ill and their families. So I think for Episcopal endowments, there's sort of three areas that I would take a look at as we're in the midst of this turbulence. And the first is liquidity. What are your current and future cash needs? The second is your operating budgets. And the third is, do you need any adjustments to your investment portfolio? And so if you look at liquidity, that's an obvious issue that we're all facing right now. And CIG recommends the fairly obvious, which is liquidity should typically come from your cash and your fixed income. Fixed income has been a very low yielding sector for quite some time. And as Bill noted, it's plunged even lower. But nevertheless, it is, even with the turbulent trading, still providing a option for raising liquidity in your portfolios. And so if you have a spending policy, that will address how you've been planning for going forward for your cash needs. If you are in the midst of doing withdrawals right now, the recommendation is to take it from your fixed income. That would be the typical place. And looking forward, we really recommend that you have 3 years worth of expenses in either cash or fixed income, so that you have the ability to tap into liquidity when you need it. On the operating front, I will say, if you can cut expenses, cut expenses. I mean, I think that is a lesson that churches learned the hard way coming off the 08-09 crisis. And those that responded to those stressful situations more rapidly really improved the chance that they would not dangerously make withdrawals on their portfolios and create a situation that really was not sustainable. And touching on the spending policy, you may have one that is a hybrid. There are a variety of different approaches, but the hybrid approach typically gives you a little more flexibility in shifting your spending downward. And I say that with a huge caveat because we're in an incredibly important moment. So what's important to maintain, what's important to increase in the face of need, and then what is dispensable, things that you can say, we're not going to do this right now, and put to the side. So it's really very important, I think, to be aware that even though it's painful, adjusting spending is probably, even with a V economy, given the damage that we've taken, a V recovery, it's an important adjustment. But it's also an opportunity to think about increasing pledging for your missions, calling pledges in early, speaking to my own community, Tuxedo Park, New York. We have St. Mary's in Tuxedo has created what we call Operation Love Your Neighbor. And we are fundraising for our local food pantry. And we've created effectively a system, a network system of neighborhood captains and a list of all the folks who are potentially in need or isolated, so we can keep track of them. And in part of that process, we've been reaching out to folks to fundraise, because we had to go and get 5,000 pounds of food deliveries for New York has been in lockdown sort of earlier than other parts of the country have been. So I think that's that opportunity there. In terms of your operating budget, we talked about that. I think it was a challenge even before we got to this place, because fixed income has not been generating a lot of return for our portfolios. And then the last piece is asset allocation. And I will give you an extension of advice that we're all getting anyway, which is wash your hands, don't touch your face, and don't touch your portfolios. It really, even though a lot of the adjustments that have taken place in the market are reasonable in terms of the changes that have occurred to the economy, this is not the time to be panic selling your stocks. I mean, if you think about it, if you wanted to own an American company, an international company, it's now 20, 30, maybe more % cheaper than it was valued just a short period of time ago. So, you know, there is a opportunity to think about what kinds of companies do you want in your portfolio. And I think the Church Investment Group works with an outsourced CIO, which is an organization that has full-time discretion and the ability to make changes in real time. And so that has led us, working in conjunction with our CIO, to focus on preserving capital as well as growth. And last year, to make changes to look at passive investing and to say, you know, this has been fantastic as we've had a long bull market, but would we be able to be positioned in a potential downturn to be in stable, high quality companies with good balance sheets that might weather through this kind of downturn more effectively? And it also enabled us to think about, from an ESG perspective, what exactly do we know? Joe touched on the fact that there are opportunities in the credit markets. You can turn to your investment advisor or your investment managers and look at the dislocations in corporate bonds and potentially even in distressed debt if you're working with folks who are in that arena. And just in terms of rebalancing, there are different perspectives on it. Some investment organizations have been rebalancing right along as we've gone through this process, but our OCIO has recommended, given the incredible volatility where we've had almost double-digit down days and double-digit rebounds, to go at this much more gradually and carefully, whereas they would normally rebalance if you're out sort of 5% positive or negative. They really have been saying, go slowly, be a little more incremental, go at 2.5% or even potentially less. And I think it's an opportunity to pause and think about, you know, what's the purpose of your endowment? And we frame it as providing a stable funding source to support your current and future missions while maintaining long-term purchasing power. And a good IPS, you know, gives you frameworks for times like this. So I'd ask some basic questions. Do you have a finance or an investment committee? Do you have an OCIO or a consultant or an investment manager? Do you have a cash policy? I know, for example, Deirdre's home parish puts aside the cash that they need for funding the grants that they know they're going to do in that year. Do you have a spending policy, an investment policy, an asset allocation policy? Back to, do you know what you own, what Bill said? And if you don't have all of these things, don't be discouraged, because this is a wake-up call. This is an opportunity for you to say, oops, don't have these things. We see how they are important, how they provide structure, and an opportunity to, as things calm down, to go back and look at creating these structured tools for your organization. Because particularly in a crisis, it's really good to have set communication strategies of speaking to your committees, speaking to your vestries, speaking to your church, to share with people what's going on, and to really have point people who are making decisions for you. And we see that as one of the virtues of an OCIO. They have that discretion to take the reins when changes need to be made. So on the opportunity side, this is a chance to think about, in addition to getting those policies, which you may not have, think about your endowment in a different way. We have worked with Trinity Church Indianapolis to create goals-based policies. And so they look and they say, we have mission, we have ministry, we have buildings and properties, we have future generations. And for their buildings and properties, where those expenses are much less flexible, if you need to replace the roof, you need to replace the roof. They have a very conservative investment policy. all the way out to future generations where they had money that was not intended to be touched and they had 100% equity allocation. And lastly, CIG is a member of the Intentional Endowment Network, that's IEN, and they have online a very helpful roadmap which walks you through the steps if you want to think about integrating your investment policy with ethical choices. But the roadmap is useful just in a process of how you communicate, how you think about what are the goals of your endowment. So I would recommend that Intentional Endowment Network roadmap. You can get that online. So sort of in closing words, this is a very stressful time, but I think it's important to step back and say, our communities are there. Even though we're doing services online, even though we're reaching out to people a bit remotely, the heart of what we are is still in place. Our endowments are tools, and it's important to work with them and support them in a crisis, but they're a tool to what we do on a ongoing basis. And I think that our communities are intact and doing great things in the midst of all this struggle.
Thank you, Joanne. That was a very thoughtful analysis, and we appreciate, obviously, the treatment of both caution and opportunity, particularly at this time. We will figure out with the SEEP network how to provide some of the resources that have already been mentioned, in fact, authored by some of our panelists. That includes Bill Jarvis's article, Seeing Clearly, which was very prescient, it turns out. And Joe Matthews has research published through Morgan Stanley that we are able to share. And Joanne mentioned the Intentional Endowment Network. They have a lot of open source on their website. We're also happy to send the presentation that was included at SEEP 2020 in the Endowment Smart Start. We're quite happy to share that. It's a PDF document. And we're going to be hearing shortly from Episcopal Church Foundation from our partners there, Carsten and Jim. And Jim will be speaking to us about some of the great resources that they have for our financial decision makers and trustees at parishes. Joe, I'm going to hand the mic to you for a moment. Joanne talked about caution and opportunity. And I guess I'd like to ask you, some of us may be thinking this, how should we be behaving as investors now? Should we be buyers and sellers of things?
Well, that's a tough one. There's a yes and a no component of that. So the rebalancing element, right, which would be bringing your asset allocation, right, what you have in stocks, bonds, cash, alternative investments, back to where, as a committee, you feel comfortable with that, okay? And for that matter, with the dislocation we've seen in stock prices, you very well may have to go in and sell something to get your stock allocation back to where it should be per the investment policy statement. And that may very well be from bonds, right? Because bond prices, independent of the last week or so, have just skyrocketed, okay? So the answer is yes, you should, provided the opportunity is presenting itself, and two, it's consistent with what you're trying to accomplish. And again, looking at some of the data that we've seen in the last 4 to 5 weeks, there are markets down 25, 30, 35%. And as we just heard a few moments ago, I mean, there are things that are on sale from a month and a half ago that are in some cases 40 to 50% cheaper. So this is a funny business that we're in, which is when prices go down, people want less, and when prices go up, people want more. And that's because those ugly twins, right, fear and greed, present themselves at the absolute worst times, right? We're physiologically hardwired to become afraid when we should be not afraid, and to become greedy when we should be anything but greedy. So given what we've seen happen, I would say yes, there are opportunities in looking at many different asset classes. Now, with that, there's no reason to be a hero, right? When the knife is falling, you can let it hit the ground, right? You don't need to try to catch it, because if you do, it's not going to feel so good, right? In many cases. So with that, looking at what and how previous recessions, what has performed well, typically it's high quality, slightly defensive, okay? We're probably a little too early for many of the cyclical type of things. But that being said, there are pockets of different equities that historically have performed well coming out of this, a recession, right? Now we all know, and looking at, the recessions going back to the early 1960s, maybe we don't all know, but the one-year return coming out of a recession over the last almost 60 years is almost 50%, 50%. So there's money to be made, right? Crisis creates opportunity, right? Bear markets are the end of recessions, right? This is not the beginning of a recession. Bear markets typically, signify the end of a recession. We would argue fourth quarter of 2018, which seems like a walk in the park now, right? When the market was down 19.8% from its high, 75% of stocks in the S&P 500 were down 20% or more. Okay, that was very unpleasant at the time. Now we're in the middle of something that seems like, a Category 5 hurricane, right? That was just a little blip on the screen. So yes, to answer your question directly, yes, provided it's consistent with tolerance for risk, time horizon, and need for liquidity. Okay, and when those three things are present, there's no reason not to look at different asset classes as opportunities. 2018, all 17 asset classes underperformed inflation. That didn't even happen in 2008, right? So markets change, right? It's the one constant on Wall Street is change, right? And as those changes occur, driving the car, looking out the windshield as opposed to the rearview mirror, skating, I'm going to use another one, skating to where that puck is going to allow you to identify what could be undervalued securities based on, market action that is not all that consistent with reality, right? Which is either the fear or greed component, depressing prices or elevating prices.
Thank you, Joe. All three of you, Bill and Joe and Joanne, thank you so much for your comments. We certainly hear you that there are things to do right now and to work with our advisors. And so if we don't have advisors, to seek advisors and to be able to move towards prudent governance, a sanity checked or revised if needed asset allocation, and essentially not to freak out, but to stay calm. We may throw up on our shoes in the, in the vestibule, but we can stay calm and we can stay connected and we can carry on with the business of prudent management of our endowment assets. We're going to hear now from a wonderful contributor who joined us at SEEP 2020 for the first time as a panelist, Carsten Sierck. Carsten, you work very closely with investment committees, and your mantra, every time I've heard you speak, and even in text and email, your mantra is to build trust via communication. What are 3 communication actions you advise endowed parishes and entities to take right now?
Yeah, sure. Thank you, Deirdre. So trust is extremely important at all times. It is the foundation for all of the work we do together as faith-based communities, and it is certainly the foundation for our financial work together to provide the resources that sustain our mission and our ministry. At the Episcopal Church Foundation, as Deirdre mentioned, we work with many, many churches, vestries, investment committees, in good times, in harder times, and today we have some recommendations about what you can be communicating now. Others talked about what you might be thinking now about investments, but here also there is an opportunity to communicate now to help you make good decisions at a difficult time, but also to maintain or even enhance the trust and the confidence of your church in your leadership. Many of you do have an investment committee in place to oversee your long-term funds. That's where I'm going to start, but these suggestions apply to any church with long-term funds. I'm going to talk about communication in 3 areas. First is within the investment committee. Second is between the investment committee and other church leaders. And the third is among the congregation as a whole. So first, within the investment committee, here your goal, and others have touched on this, here your goal is to ensure a common understanding among committee members, which will be then the basis for your communication with your vestry and parish. So you will want to continue to meet. You'll probably be doing so virtually. Don't hesitate to get that set up now. Continue to meet and make sure that you have any extra information that you may need from your investment manager. Talk about how your long-term funds are restricted as to purpose, restricted as to spending. And by long-term funds, I mean funds that you have set aside either very formally to last in perpetuity, the way a donor might have designated, or funds that you as a vestry, as a church, have set aside with the intention that they will be available in future years to provide a steady stream of funding during that time. Others have talked about reviewing the underpinnings of your investment policies and your spending policies. Do that, talk about the underlying assumptions, and very importantly, please communicate with any new committee members to make sure that they have the same understanding as those members who were on the committee when those decisions were made initially. This type of conversation becomes the basis for considering how you can or how you should use your endowment in challenging times. Talk about your role as a committee. Typically, it's to make strategic decisions, it's to oversee the investment manager, it's to make spending recommendations to the vestry. In stressful times, it can be tempting to overstep. As Joanne mentioned, talk about your cash, review your spending policy, review your regular distributions, the timing, the frequency, how it's calculated. Talk about any additional distributions that may be possible. What's permitted, what's advisable, maybe a separate conversation, how that would occur. Again, this is an opportunity that you have as a committee to respond to a crisis with a good understanding of your long-term funds and to get prepared for a conversation about balancing long-term responsibilities and short-term needs. So that's a very important conversation to have within your committee. Then second, you need to be considering the communication that you need to have between the investment committee and the other church leaders, namely the vestry. Here, your goal is to update. Remember, to update the vestry. They have obviously delegated to you a significant amount of responsibility. Your goal now is to update them about your oversight and your recommendations. Inform them how your oversight continues now. Inform them about any extra steps you have taken, any new information that you may have, and remind them about the purpose of the endowment, the restrictions on the endowment, and any previously set policies you may have around your endowment. Here again, there may be new vestry members. There may be vestry members without a financial background. Certainly in our conversations at ECF, we see the steady turnover of volunteers that make up all of these church committees. We work to make sure they are up to date, and now is a very good time to do so. Discuss your scheduled distributions, the budget implications, possible changes to the timing or to the amount of any distributions. And then very importantly, now together we're talking here again about the investment committee talking with the vestry. Review together the church's cash needs now and in various future periods, maybe 3 months out, 6 months out, next year, so that you could aim to coordinate among the treasurer, the vestry, the finance committee, the investment committee around your long-term funds and your short-term funds. And here, there really is, in this moment, that's really not at all easy, there is this opportunity to create a framework for planning together in difficult times. So that then is this very important communication between the investment committee and the vestry, which is going to be ongoing and probably occur more frequently now and over the next few months than it typically does. In addition to that, the third very important area of communication to take on now is communication among the parish. The goal here, to go back to the beginning, is to reinforce trust and confidence. This is necessary always in the short term, but it will be of great benefit to you now in the long term. So update your parish on your plans for the church's immediate financial needs. The gravity of this situation is clear to everybody. So be honest, be transparent, share your plans, reassure, tell them how you are working together to manage this situation. Here there is an opportunity to model the same care for the congregation in financial areas that you seek to provide in other missional areas. Opportunity to do so together. Explain to the wider congregation the nature and the purpose of your long-term funds. There can be some misconceptions here about what is available to you now. Explain to the congregation your strategic decisions that you have made in the past around those funds, and then explain the responsibility that you have to protect and use funds as intended by donors, to protect and to use as the donors intended. Going back to the beginning, this is again a moment where you have the opportunity now to continue to build the trust and confidence in the church, to manage church financial resources and protect donor gifts. This is good practice at any time. It's good practice now, and it will be essential to your future giving, which you will have. The actions you send now are a signal. They send a signal now to the congregation, which is your source of future support. So show them now that they can trust you to handle a crisis with care and with responsibility. So that's an overview of what we recommend now about communicating with your church, again, within, between, and among. And I'd like to turn now to my colleague, Jim Murphy, who will talk about some of the resources that ECF, the Episcopal Church Foundation, has that may be of help to you now.
Thank you very much, Carsten, and I have to thank Carsten for the incredible job of the heavier lifting in this presentation. I get to do the lighter side, so thank you. That was exceptional. And thanks for all my colleagues with the SEEP network. So for the Episcopal Church Foundation, many of you know that we have a number of resources online which are available free of charge to anyone who visits our website, ecfvp.org, which is our Vital Practices website. We'll be sharing this website with the SEEP leaders so that you can take advantage of it. On it, you will find a number of articles and webinars, all focused on a variety of topics for church leaders, both for your ability to handle some of these crises now as well as for the future. The extra thing I do want to point out is we have added on this website, ecfvp.org, a number of new resources for the COVID-19 emergency that will include a variety of general information, such as communications from the National Church, but also things such as the CDC and Episcopal Relief and Development and other things which you can do. Many of you out there are doing wonderful, wonderful work in sharing your services online. We also, on this same COVID-19 resources website, provide a simple guide for setting up online worship via Zoom, which you can visit and check that out, as well as many prayers, meditations, conversations, and guidelines, all of which will assist you as you do this sort of work. Quick summary, some of our resources are low cost. Many of you know the Vestry Resource Guide. It is now also a companion. Those of us who were at the gathering at the pre-conference of SEEP got a free copy of the Finance Resource Guide, which will be coming out in Spanish in spring of 2021. That is the current plan. In quick summary for this resource, it is an overarching practical guide focusing on all variety of finance for the parish, from theology to general leadership, strategic thinking, as well as administration. Each chapter of that book focuses on these aspects and ends each chapter with opportunities for conversation starters, action starters, and other related resources which you can take advantage of. That is something which can be purchased through Forward Movement Publications or through our episcopalfoundation.org website. Finally, just very quickly, as you know, we also have a number of free resources for planned giving, webinars, articles, and other things for you to do. You may see those all on the ecfvp.org website or on our own website. But of course, there is an item which you can purchase if this is a time, as Carsten has been focusing on, for building trust, building a sense of the future and a focus on the future. This may be an opportunity to consider bringing up in time the planned giving for your parish. And the Episcopal Church Foundation, of course, has the planned giving on demand resource, which can also be ordered through Forward Movement Publication and via our website for $35. But most of the resources are free and available on the website. And I wanted to keep that brief. Deirdre.
Thank you. Thank you very much, Jim. We've posted in the chat for all attendees the links to ECF Vital Practices website. We've also posted the link to Intentional Endowment Network's website, where you can view the roadmap, which is also a guide for conversation. So I would add that to Carsten's three-prong approach. We've got a lot of three-prong approaches. So I want to thank Bill Jarvis for giving us 3 governance actions we can take at this time. And want to thank Joe Matthews. Always a pleasure to hear from you. And I think you have a Venn diagram to hold up, Joe. Okay, so we'll let him get to that. Things that matter, things you can control, what you should focus on, right? Okay. Thank you, Joe.
I was just going to add, we're at churchinvestment.org.
I will post your website as well. Thank you, Joanne. And thank you also, Joanne, for giving us 3 levels of response that parish endowments can consider. And Carsten, your within, between, and among. We know communication is key. I truly believe that trust is actually the energy of the Holy Spirit and the greatest currency that we have. And we need to build it, and we need to keep it. We need to maintain it. And I thank you really for your contribution regarding how crucial communications are at this time. I want to thank everybody for participating, and let the people know who attended that we will be both hosting additional webinars that will probably drill down more deeply into specific subject matters. And also we will be following up on your questions with a follow-up and response piece, just because we have financial firms employees and directors involved in this conversation. We're not able at this time to take open questions for this particular webinar, but we will respond to your questions sent by either email or chat. And it's 4 o'clock. We said we'd be good Episcopalians and be orderly. So everyone go with God, and thank you very much for your actions today.
Take care and be safe.
Be well and healthy.
Stay safe, everyone.